Welcome to Consultants and Money, the podcast for solo consultants who want financial clarity without the overwhelm. I'm your host, Erica Goody, CPA, bookkeeping, and CFO partner, and a fellow corporate ship jumper who built a business with balance in mind. Each week, we talk about the real money stuff, from keeping your books clean to calming cash flow chaos, saving on taxes, and planning for what's next, so you can focus on your clients and enjoy your life. A quick note, this podcast is for educational and informational purposes only, not financial, accounting, or legal advice. Be sure to talk to a professional who understands your specific situation before making any decisions. Hey there, welcome back to the podcast. I have to tell you, right before I recorded this episode, I took my normal lunch walk, which is around my neighborhood, and I'm still feeling it. So if I sound out of breath, it's because I probably am. I just walked up a 200-foot small mountain to get here to this recording. So I'm glad you're here. Welcome back. Today, we're going to talk about a word that sometimes makes business owners cringy. We're going to talk about forecasting today. But don't worry, I'm not going to throw you a 40-tab spreadsheet or make you guess what the economy is going to do next year. This is forecasting for real life and real business. And most importantly, forecasting for your peace of mind. Forecasting isn't just about predicting sales, it's about giving yourself a plan. A plan for paying yourself consistently, a plan for knowing if you can afford that next hire, a plan for making that next payroll, a plan for surviving a dry spell without going into panic mode. So let's break it down. Here's what forecasting really is. When I say forecasting, I don't mean crystal ball, 8-ball fortune telling. Forecasting just means asking a few key questions. For example, if things keep going like they're going, what will my money situation look like in 3 months, 6 months, a year? And it's not about getting it exactly right. It's about knowing what could happen so you can adjust early. It's like going to the airport. I don't know where you live in relation to your airport, but we live a couple hours away and there's many roads to the airport. It's like pulling out your Google map and looking at traffic before you leave for the airport. This is what me and my husband do. He drives and he's like, hey, pull it up and see which highway we should take. And it's not about trying to get a green light every time. You're just trying to avoid the parts of town and the parts of the city that are on gridlock that are really going to slow you down. And that's the same thing with a forecast in your business. You're not going to get green lights every time, but you're trying to avoid the really messy parts that you don't see coming. So why do business owners need a forecast? Let me walk you through what I see over and over again, whether you're a solo consultant or you're growing into the agency model. Here's what I see. Number one, a forecast smooths out your paychecks. I talk to so many business owners who tell me they paid themselves $8,000 last month, and then this month it might be $2,000 or zero, and then next month's going to be $20,000 because that big invoice is coming in. They're not really sure yet. That kind of variability makes it really hard to run a life, let alone a business. With forecasting, you start to stabilize things. You can see ahead of time that, hey, August might be slower, so let's make sure we manage cash flow a little bit more in July. It takes the emotion out of paying yourself and puts a plan in place instead. Number two, a forecast tells you when you can hire and when you can't afford to hire. This one's huge for somebody growing into an agency model. When you're overwhelmed, it's tempting to say, I just need the help. I'll figure out how to pay for it later. But gut feels aren't hiring plans. Even with a simple forecast, you can model out what happens if I bring someone on at $5,000 per month. Will I still be able to pay myself? Will I run out of cash in 3 months? I see this a lot, especially I've seen this before with sales individuals. I'll see a company bring on a salesperson, and as their fractional CFO, I'll come back and I'll say, okay, well, how much revenue is that salesperson going to generate for you, and how quickly is that going to happen? And sometimes I get deer in the headlights, like, huh? Well, I'm just going to hire this person. Yes, but that person has a purpose to go get you more revenue, and we hope that that person pays for themselves. So what is our forecast for how much they're going to cost, and what are they going to do for the company, and how quickly is it going to take them to get onboarded and turn around sales for the company? When you have that kind of clarity, it lets you move forward or pull back and pause, either one with confidence. Number 3, why you need a forecast is that it helps you stay calm during slow seasons. Every business has dry spells, but what makes them scary isn't always the numbers, it's the not knowing the numbers. When you've mapped out what's coming in and what's going out and when, you've got a plan. Even if it's a wobbly one, you stop waking up at 2 a.m. asking, am I going to be okay? Is my business going to be okay? You start to trust the yes, you've got this. So here's what you need to actually get started with a forecast in your business. The good news, you don't need fancy software. You don't need to be an Excel wizard. You don't have to color code all the things. Here's what you do need. Current revenue. What's coming in monthly? Is it recurring? Is it project-based? Is it one-off? Then I would look at fixed monthly costs. Are you paying rent in a co-working space? How about payroll or contractor fees, subscriptions, anything that you know you'll owe in the coming months? Next, what is your ideal or minimum owner distribution or your owner pay? What do you need to take home to run your life on the personal side? And then any other big expenses coming? Do you anticipate a hire or a rebrand or a website refresh or maybe a big retreat or conference coming up in the next few months? Those are the things you want to start thinking about. And it really helps, in my opinion, to break these out on a monthly basis over the next 3 to 12 months. Once you've got those basics, you can sketch out a plan. It could be in a spreadsheet, or it could be on a whiteboard. It could be in a notebook. It could be on the back of an envelope, honestly. The point isn't how you do it. It's that you give yourself a peek at what's coming so that nothing takes you by surprise down the road. Here's a simple exercise you can do to get started with this. If you've been avoiding your QuickBooks, I get it. But you don't have to do it all alone or dread it every month. I make your books cleaner, clear, and tax ready so you can get back to what you actually enjoy doing. Here's the first step. Head to ericagoody.com, then fill out the connection form, and I'll follow up to schedule a no-pressure free meeting to see if I can help. I'll leave a link in the show notes. Sometime this week, book some time on your calendar for yourself, not for anybody else. Give yourself a half hour, no more. Don't make this a big thing. Grab a piece of paper or open up a Word doc, an Excel, a Google Sheets, whatever you feel like your brain works best in, and list out the next 6 months. Then write down what you expect to bring in each month based on signed contracts or recurring clients or your pipeline. Number 2, write out your fixed costs each month, and then list out what you need to pay yourself on a monthly basis. Then ask, how many months here do I feel solid with the results? Where does it start to feel tight? Even if the numbers aren't perfect, this gives you a huge leg up. You'll be able to spot gaps, prep for dips, and stop white-knuckling your way through each month. I had a client once who we were cash flow forecasting for her. It was something we did together every month. We would meet, we'd cash flow forecast, and one time she came to this meeting and she had a big sales call coming up in the next 30 days. And she didn't know how it was going to go. Big client, she figured she was going to get them, but didn't know what to offer. And just, you could tell her shoulders were up in her ears, just really uneasy about how this was going to go. And so we started scenario planning with what direction could this go? Well, if the client came back with an $80,000 contract, here's what cash flow would look like. If the client came back with a $40,000 contract, here's what that cash flow looked like. And what she found was that at the lower amount, at the $40,000 contract, her cash flow and her owner pay was going to be just fine. And she had maybe wrongly assumed that she had to just go for it all with this prospect. She had to get the highest amount she could. And she actually didn't. Actually, her consistent owner pay would be perfectly fine if she got a lower contract with them. Now, that's not to say that she didn't try for the higher contract. She wanted the best service for whatever the client was looking to do. And that was the right move for the client. But all of a sudden, she was able to walk into the sales call knowing that her owner distribution, her monthly pay wasn't on the line by this one prospective client, that she could suddenly go into this sales call with a much calmer attitude, a much more easygoing demeanor with this client. And it just totally changed the sales conversation and the feeling of her pipeline. That's what forecasting can do. It doesn't make everything perfect, and it doesn't tell you exactly how things are going to turn out, but it does help you stop guessing. So I'll leave you with a few final thoughts. Forecasting isn't just a financial task. It's a self-care practice for your business. It gives you the data and the confidence to lead your business, not just react to your business. You don't need to be perfect. You don't need to predict the future. You just need a plan and the willingness to adjust it. Thanks for joining me today. If you found this episode helpful, share it with a fellow consultant who might need it too. And until next time, here's to cleaner books, calmer cash flow, and more time for what matters most to you.